Is VWO a good ETF? This is the Vanguard FTSE Emerging Markets ETF. This is an emerging markets large cap blend fund. It was incepted back in 2005. Currently, there are just over $93 billion in assets under management. The management expense ratio is 0.07%. You can currently buy VWO for around $52. This fund trades on average over 8 million shares a day. The bid-ask spread is 0.48%, so you might want to be a little careful when purchasing this investment. The beta is 0.94. This is a very passive ETF with 8% portfolio turnover. And the long-term Sharpe ratio is 0.37. So this fund is heavily invested in China at 33%, India at 21%, Taiwan at 21%, and you're going to be invested in other countries like Brazil, Saudi Arabia, South Africa, Mexico, UAE, Malaysia, Thailand, Indonesia, and Kuwait. This ETF invests about 9% of its money in communications companies, 13% in discretionary, 5% in energy, 22% in financials, 5% in healthcare, 8% in industrials, 7% in materials, 5% in staples, and 22% in technology. The top holdings of this ETF are Taiwan Semiconductors, Tencent, Alibaba, HDFC, Reliance, ICIC, China Construction Bank, and MediaTek. These companies are currently yielding 2.7%. It has an attractive PE ratio at 14.72. A low P to B at 1.78, a great price to sales at 1.60, and a pretty good price to cash flow at 8.33. So we're going to build a 100% stock portfolio, and we're going to use Invest USA to do this. So we're going to use 17% in emerging markets with VWO, 19% in international with DFIV, 20% in VGT, 21% in XMMO to take care of our mid cap, and 23% in QQQM for the large cap. Using Portfolio Visualizer, we're going to backtest this portfolio. We can see back to January 2022. Comparing this diversified portfolio against the S&P 500, we can see that it had a better compound annual growth rate and a better Sharpe ratio. Invest USA. Download it.